Aloha, good morning. This is Crombie Davis, Crombie Realty International, and welcome, Duncan. Um, I'm so
Hi,
excited about
Karan.
having you today and, to forecast the 2026. I can't even believe it's the middle of February and we're just talking about this now. As we know, Duncan is the president of Infinite Financial, and he's been in the business for 15 years, but in the finance world for how long? Many years, Duncan, right?
Yeah, probably depending on how you count it, about 30 plus years.
And that's what I love about working with you is, you're very creative with so many different professional people out there looking at the best way to finance their home. And so today we're going to hear about some new programs and what Duncan forecasts for 2026. So I'll hand it over to you now, Duncan.
Sure. Yeah, I had my forecast for 2025, where I was expecting the Fed to cut rates a little bit less than in 2024, which is what happened. We saw the Fed cut the short-term rates by 0.75% versus 1% the year before, and we saw mortgage rates drop. Not early in the year. I had expected rates to drop later in the year, but stay above the 6% level, which is exactly what happened. On average, the 30-year fixed stayed above the 6% level. And then I expected the mortgage market to continue to be a little bit on the slower side, but to pick up in 2026, which we're hoping to see this year. Also on the real estate side, I had projected that we would see home prices stay strong, and we saw in Hawaii, the average single family home price increased by 3.5%. So that has stayed strong and hit record highs. So we're doing very well, at least here in Hawaii. And real estate is local. There are other places on the mainland where they're seeing ups and downs. But we're because of the limited inventory here, we're still under 3 months supply on the single family home side. There's just not enough inventory for everybody. They're not building more land here. There's not the new permits for new housing starts is not enough here. So for 2026, I expect the real estate market to stay strong, just because with the inventory is so low, and we have a shortage nationwide. There's a 4 million unit shortage of housing, and you have the millennials. A lot of millennials don't own homes yet, so they're
Yes.
reaching home buying age. And so a lot of people have stayed on the sidelines, and the average first-time home buyer is getting a lot older than it used to be, just because people haven't been able to afford. So you have a lot of pent-up demand, people waiting for rates to drop. I do expect rates to drop later this year to get below that 6% level. So we'll be able to see more people come off the sidelines, and that will also bring in more inventory from people that have been waiting to sell. And most sellers are also buyers. So they're looking for rates to drop too before they sell with their really low rate and buy having to go with a higher rate. So as the rates drop, then you bring in more buyers and more sellers. So we should see the volume pick up as well this year. So overall, I think it's going to be a great year for you and I in the business. And we'll be busy as rates continue lower. They won't go lower in a straight line, but as they've done the last couple of years, they'll continue to trend lower, and the
Yes.
real estate market will remain strong. And I think it's a great time both for buyers and sellers, because you can replace the properties you sell with great properties. You may not get the lowest rate and the rate that you had from a few years ago, but
Mm-mm.
if you find the property that you love, you can buy that property before the volume really picks up when rates drop a lot lower, and then you could refinance within the next couple of years to get that lower rate and keep that better property. So I
So
think
in
overall, it's a good environment for buyers and sellers.
So, as you know, our emphasis is on always on the luxury market. And,
Right.
as far as you're seeing with the, jumbo mortgages, what do you see with the interest rates or the programs available for people buying, multi-million dollar homes right now?
Well, the rates are just like everything else, other types of loans. The rates are trending lower as well on jumbo loans, and we actually have a few lenders that just came out with doctor loans too for people in the medical profession. And with those loans, people can buy get a loan for a couple $1 million with little or
Mhm.
no down payment, and
Yeah.
not have to pay mortgage insurance, get a good rate, and Even people that don't have their employment yet, if they're in a residency and they've got a job out in a couple months away, they can use that income for qualifying. And then we don't have to count their student loan debt and the debt to income ratio, so they can qualify for a lot more. So it's much easier for someone who's about to start their profession to qualify for a luxury home. Much easier than it's been in the past, where we didn't have those types of programs.
Neat. And then you were talking to me also about credit cards paying your mortgage and getting points.
Yeah, just this past weekend, a new credit card built. They did come out a couple of years ago, this built credit card, which allowed you to pay for rent. And they just came out with a 2.0, built 2.0 version, which is actually can be used for paying your mortgage. And then it's awesome for people in Hawaii, because a lot of people here have high mortgages, and a lot of people have investment properties too. And you can use it for both for your primary residence and investment property. I just paid my investment property mortgage yesterday, and it just posted. I got the points. So I got over 5,000 points from the Built Rewards, and those reward points are worth a lot more than most other points, because you can transfer them to Hawaiian or Atmos,
Yeah.
and you can also
Wow.
transfer them to Hyatt, and you can transfer
Yeah.
them to Japan Airlines. All of those are hard to earn points. So you can transfer to those, and sometimes they get transfer bonuses as well. So it's very valuable points. And for everyday spending, there's an option where you can get 2 times your spending in points, and you also can get your spending, your points on your rent or your mortgage. So you can effectively get over 3 times your for per dollar spent. You get 3 points, and so it can really rack up quickly. And it's a great way for mortgage holders here, homeowners here, to be able to rack up a lot of points for traveling. So that's something that I'm pretty excited
I know.
about. I
Actually, I'm
actually
very
started.
excited hearing this. You always have to know about the best programs outside the mortgage world. And so if somebody wants to find out about this credit card, should they get hold of you, or how does that work?
I actually started a Facebook forum, a Facebook group, so
Yeah.
anybody could look up a built. Right now, it's called Built 2 Plus Mortgages. It's a brand new, very small Facebook group now, but we'll be growing it. And you can. I posted a bunch of things in there to tell people about the products, but it's meant to be interactive for people to ask questions and to post to share information. So I created that Facebook group this week, and that will be growing, and it'll be a great opportunity for people to share information, especially, and it's more focused on mortgages and people that use it to pay their mortgages, whereas the previous built card was more focused on using it to pay your rent.
Oh, I see. Okay. Well, that's wonderful. And any other programs out there, or words of
Yeah.
inspiration, people looking to finance right now?
Yeah, we have quite a few different programs that a lot of lenders don't have. We have several loan programs where you can qualify without a credit score or with a really low credit score. So people that have really bad credit scores, and we can finance them. Usually they'll want to have a bigger down payment for that type of program. We also have several zero down programs, including a program where you can get a grant of 3 to 3.5% to completely pay for your down payment. And once you make your 6 monthly payments, you get that amount, the 3 or 3.5% gifted to you. You never have to pay it back. So unlike a lot of other down payment assistance programs, you don't have to pay a high interest rate second mortgage. And unlike a USDA loan, you don't have to buy in a certain area. You can buy anywhere with this zero down program. And we have several different options. So if people don't have a down payment, you still can buy, but you do need to have good credit, and you still need to have income. But we have programs for, usually there's the credit, there's the income, and the assets. We have programs for without the credit, or without the income, or without the assets, but not all. Basically, if you have two of the three, we usually can have a program for you. On the investor side, we have programs where people can get a DSCR loan where you don't use any of your income. You just use the income from the property, and the property, there's no minimum. So a property doesn't have to cover the mortgage. You can have a property where it's a very low rental income, but you still can qualify for quite a bit on the purchase, on the loan amount. And you can supplement the rental income with your assets. If you have significant assets, then you can add that to qualify for more. and to get a lower rate. So I've had some people that buy a property, they'll do some fixes, and there's no seasoning requirement. So they can buy a property, fix it up. A month or two later, they can get a loan and they can get cash out based on the new appraised value. I've had people do that, and they buy with cash. They get the cash out a couple months later for over 90% of what they put in. So in
Oh,
effect, they're
wow.
buying a place for less than 10% down, and they can just do that over and over and build up a real estate portfolio there. So that's a great program for investors. And we also have seen several cases recently where people are buying properties that are in really bad shape and they wouldn't qualify for a regular loan. So we
Mm,
use the interior, well, we use appraisals that don't require an interior appraisal. And there's
got
a
it.
couple of different ways to do that, but we've done a lot of
Yeah.
loans that way so people can buy with even if the condition's really poor.
Nice. Well, thank you for all the wonderful creative methods of, making your money, just grow and only put down what you have to, really, not really. It's really having that leverage that allows people to, grow with their real estate growth. I
Yeah,
mean,
and
it's
one of the keys
excellent.
is most people think you got to have the big down payment, the credit, and the
Yeah,
assets to buy. But we have different ways to make it work without having all three of those. So
correct.
people can come to us. If they go to their local bank, they're not going to be able to do that. But if they come to us, then
Yeah.
we can figure out ways to make it work.
No, thank you. Well, thank you for being with us today, and all the best for 2026. And we will regroup here next quarter and see how the end of this quarter goes and going into the middle of the year, of course.
Thanks, Karan.
Much
Happy
color and
2026.
lovely. Thank you.